Hey guys, it's Richard at altFINS with another market update and some technical analyses. Today I'm going to look at some falling wedge patterns and how they form and what they indicate and what happens when there's a bullish breakout. Secondly, I'll do a review of several trading setups, including AAVE, Internet Protocol or ICP, Curve, CRV, EGLD, and also QNT. So let's go ahead and dig in. In terms of the last week, let's look at the performance for the last week. Bitcoin held steady, basically unchanged. Ethereum was slightly up, along with some other tech stocks on the NASDAQ index, which was up last week about 4.5%, I believe. So crypto does seem to still trade in line with the general risk assets like tech stocks. Of course, there's a fair amount of divergence in terms of the performance for the last week. But overall, I'd say we're still trading in a sideways channel, have been really in the last 4 or 5 months. Let's look at Ethereum last 6 months. As you can see, it's been kind of bouncing between that 1,000, really about 1,200 to about $1,600 range, and we continue to go sideways. So really what we need to do is be mindful of support and resistance and really trade between the support and resistance of the sideways channels. Now if we look at the trends as detected by our system, overall we're mostly still in a downtrend. In the big picture, like I said, sort of a sideways channel in the last few months, but there's some exceptions. Let's look at there's Ripple is in an uptrend on the medium term basis. MATIC or Polygon is also up, and that's really actually been doing quite well in the last few days. Not many of these coins that are up. Of course, it's really easy to find them on our platform, but let's mention a few more. Quant is trading in an uptrend. Elrond, which we're going to analyze today, is in an uptrend. Huobi token, as well as Apt, which is a new token, layer one, launched just a few days ago. So one way to also see that most or very many coins are making 52-week lows or are closer to their 52-week lows than 52-week highs. There's a quick way of doing that. If you go to our platform on the signals and filters and look at the 52 weeks here, you can see very quickly all those coins that have the last price within, let's just say, 10% of the 52-week lows. 562 coins that satisfy that criteria. You can take a look at the results, but unfortunately still a lot of the coins are trading near their 52-week lows. In terms of 52-week highs, we're certainly very few coins that are near their 52-week highs. Let's see, last price is within 10% of the 52-week highs, only 29 of them. And in fact, I'd say many of those will be stable coins, which really don't count. Now, having said that, like I said, it's important to be mindful when trading, anytime trading, frankly, to be aware of the support and resistance zones, and especially when you're trading sideways channel. Now let's take a look at Maker to demonstrate how important support and resistance zones are. So Maker, made a nice run recently from about 600 to about 1,000. Surprise, surprise, it got rejected there. Is that really a surprise? Not really. If you look at the technical analysis that we have, or we call them curated charts, we indicate that the $1,000 to about $1,100 is pretty consistent and persistent resistance zone, where the price has been rejected several times in the last 4 months. 1, 2, 3, 4, 5, 6, 7 times now. So it doesn't surprise me that it got rejected there again. So this is important to be aware of that. Not only is it a horizontal resistance zone, but there's also a 200-day moving average. As you can see, the 200-day moving average in the red line. Also very important sort of dynamic resistance or support area, depending on whether we are above or below that. And so clearly here, the 200-day moving average also served as a resistance area on a couple of occasions in the last few weeks. So yes, resistance and support are critical. You can find lessons teaching how to identify those zones in our education section, not only in the trading videos, but really in the trading course, where we have several lessons talking about various trading strategies, including every one of them really talks about support and resistance, but particularly this lesson number 5. All right, let's go back to some of the analyses here. So let's dig into the falling wedge pattern. And the best way to demonstrate is to see, in this case, AAVE. We talked about AAVE last week as a breakout from falling wedge pattern. And indeed, it's done quite well since then. It's up about almost 15% since the breakout. Let's take a look at that. Again, technical analysis chart here that we prepared. This is, like I said, from about a week ago. This falling wedge has been forming in the last few months, and it's indicated really by several sort of lower highs, but the lows, the swing lows, are every time there's selling pressure, the selling pressure is weakening, and the downswings were getting smaller and smaller, and so those two, the resistance and the support areas, when connected, formed a falling wedge, which really indicated that the selling pressure was abating or alleviating, while the buyers were starting to accumulate. And when we last week saw that breakout, that was a signal to get involved. It's up about 15% since the breakout. Like I said, based on the theory, really the price has the potential to go as high as 115, but I'd say in this market we could see it get closer to about 100, which is also where the 200-day moving average is. So that's, again, like I said, $100 is a horizontal resistance, but also there is the coincidentally also a 200-day moving average, which also acts as a resistance. So I'd say I'd take my profit somewhere around $90, $95 if we get there. But this falling wedge breakout has been working out well, and falling wedge patterns oftentimes do resolve in the bullish breakout, and oftentimes are trend reversal patterns. In fact, AAVE had one even way back in May, when the falling wedge also was had a breakout bullish and had a great run after that, and then it's consolidated in another falling wedge and it's breaking out again. So this is a very it's a pattern that really can generate some really nice profits. But notice the other thing here, how the price has been consistently respecting the 200-day moving average on several occasions. Okay, so don't underestimate the importance of the 200-day moving average, either as a resistance or a support area. So having said that, what other coins can we identify that are in a falling wedge pattern? Well, first of all, you can find some of them on the chart patterns, or the automated chart pattern section that we have here. Quickly, you can go and jump to the falling wedge pattern and identify several that are either trading in an emerging falling wedge pattern or have broken out of a falling wedge pattern. And another way to find some of them is through our own in-house research or technical analysis. And here you can either just scroll down and find them, or you can actually filter them as well. Falling, let's see, so here we are. We have ICP, Internet Computer, we have AAVE, Curve, and Cardano, all of them in the falling wedge pattern. So let's take a look at the first one, Internet Computer. Well, here, this one, as you can be seen here, has been really, consolidating in the last few months, similar to AAVE, and it's really the prices at that pinnacle of the falling wedge, which means that we are getting close to a breakout. Now, it could be a bearish breakout down, so we can't assume that it will be a bullish breakout, although most of the times it is. So typically traders wait for that breakout. In this case, if we break out, above, let's call it 520, 530, then I'd say that's a bullish breakout with a potential upside to $8, which is also where the 200-day moving average is, and the next resistance area. Another one, Curve. Let's take a look at this one. Also consolidating in a falling wedge. Less clear, it could be actually a down channel. And so, in either way, we need to wait for a breakout. In this case, breakout would probably happen if the price breaks above dollar level. And in this case also, what I would suggest is, in both cases, all these cases, is to stay on top of these breakouts with using alerts. So in the case of Curve, as I mentioned, we can look at the again the chart as well as the curated chart or technical analysis here. And so if we want to be alerted for when the breakout happens, in this case, it will happen when the price breaks about $1. So I already have an alert that I've created right here on the alerts tab very easily. And so if I remove it, I can create it again and say, alert me if the price is about $1. Okay, so this is a great way to stay on top of it. You will receive an alert notification as well as an email, but also under your alert section here. And then the next one I wanted to take a look at is a couple of other situations. These are not falling wedge situations, but coins that have been are trading in an uptrend. So Elrond, EGLD, look, it's trading up 3.5% today, bucking the trend overall. The market is slightly down today, so it's that's always an interesting data point when you see a coin price trading against the trend or against the market overall, or bucking the overall market sentiment. So here, what I wanted to demonstrate or mention that it has been trading in the sideways channel consistently, right? Really in the last 4 months between $50 and $65. So here the strategy is to enter near the support zone $50 and exit near the resistance zone of $65. So we're getting close to that now. The price is at 59. So somewhere around 62, 3, 4, 5, I would be probably shorting it with the assumption that it's going to get rejected at that $65 resistance again, even though it's overall in an uptrend. And so if it does break above that $65 level, then we could see it rally further above that. And then the last one I'll mention is Quant. This has been a name that's been in the news and has had a huge tear, huge gains, from $50 to $200 recently. But we're starting to see some profit taking. If we zoom in a little bit in the last price action, as you can see, after the huge run up, it's consolidating here, and it's forming what they call the Bullish Pennant, which is a triangle after a very rapid rise. There is some some profit taking and some uncertainty, and that forms sort of the triangle. We have it drawn here in the curated chart. As you can see, when you connect some of the lows and recent highs, it basically creates a triangle at the end of this very rapid rise. And so this is a bullish pennant. Bullish pennants tend to resolve bullishly, as suggested by the name. So again, I'd wait for a breakout from this formation or pattern, in which case we're likely to revisit the $225 resistance zone after that breakout. So keep an eye on this one as well. Again, in this case, I'd set the alert somewhere around 190. That would be a clear indication of a bullish breakout. All right, everyone. Again, these are just my opinions, not financial recommendations. Everybody do your own research and analyses. I hope altFINS proves to be a valuable tool in your analysis and research as well. Good luck trading.